Donald Trump, tariffs, Mark Carney, and rate drops. All this and more with our good friend and mortgage broker, Mr. Dion Beck, right after this. Here we are, my friends, with our favorite mortgage broker in all the land, Mr. Dion Beck. How you doing, my man?
I'm good, man. We've had a couple of weeks off, and it's like the world exploded or imploded or something in the middle.
That seems to be our thing. Just take a couple of weeks off, and all you know what goes and hits the fan.
Exactly. But a lot to talk about. Where do you want to start?
I don't know. Okay, what do we got today? Obviously, we're recording this on March 12th, so we got a rate drop. We've got leadership changes in the Liberal Party. We've got Donald Trump doing Donald Trump things. We've got the real estate market that just, as the day closes every day, people still buy and sell real estate, Dion. But let's kind of talk maybe first off with Mark Carney becoming the new leader of the Liberal Party.
Yeah, so I mean, it's pretty clear that towards the end of last year, Trudeau came out with what Chrystia Freeland herself labeled as gimmicks, with these HST breaks and these checks to Canadians, really trying to win the hearts of Canadians after the damage was done with immigration and housing and a whole bunch of other things, which made Canadians quite disillusioned. And if I was a betting man and you asked me at that time who would win the next election, at that point in time, it would be like everybody's pointing to the Conservatives, right? And then just a couple of weeks later, and over the last couple of weeks now, Carney came into the picture, literally flew in from England, right, where he spent the last couple of years managing the Bank of England. And he's like, yeah, look, I wasn't part of this mess, so I can poo-poo all the stuff that Trudeau did, and Freeland and others cannot, because they were part of the creation of that. And that's really what's led for him to be now the leader of the Liberal Party.
And I'm sure everyone's seen the results. It was kind of a landslide win for Carney over the other three or four candidates, maybe three other candidates. And it is quite interesting. You touched on it briefly there. The polls would suggest that the Conservatives were way out in front, and if when that next election is called, it was obviously going to move towards a Conservative government. I don't know if it's going to. Let me rephrase this. It's going to be a lot closer during our next election than people, I believe, thought it was going to be.
Yeah, I think so. And I think strategically the Liberals have found somebody who can unshackle themselves from the decisions that led the Liberal government to put us in the position that we are in as it relates to housing and immigration and jobs and all of that. So they've found their sort of white knight in shining armor that wasn't all messed up with all the other stuff. And then, Polyev now actually has somebody that has an actual fight in them, probably.
Yeah, and as I walk perhaps on some thin ice with maybe some of our listeners at this moment, Polyev has been endorsed by our friends from the South, Trump, and that other guy that owns Tesla. I don't know if he or any party would want that endorsement at this moment.
Now that may be the kiss of death, potentially, right? With the way that Canadians are feeling in terms of sentiment.
Yeah.
That all said, cut through all of it, we're going to have a relationship with the US, and whoever that is who leads the country is going to have to contend with the guy who, depending on what side of the bed he gets up on, is going to shoot off this tariff or that tariff or whatever it might be, right?
Yeah, it's so true, and it's in. We were chatting offline, and I know we've said this on the calls prior to this. Is this whole tariff war? And is exactly what it is. It has done something that has not been accomplished in many, 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 many years in Canada, and that's quite frankly is kind of unite all Canadians with one mission, in a sense. And one goal, and that's to come together and stand up for Canada itself as a country.
Yeah, well, they say that the way to unite people is to find a common enemy. And who would have thought that the common enemy would be the United States of America? I mean, in this context, it's still crazy.
It, it absolutely is. And I know we've been to all our local, Walmarts and Canadian superstores and things like that. And I can tell you from firsthand experience, I have friends that will choose to buy in, for example, the Canadian superstore versus a Walmart or a Costco or things like that. And we've all seen it, and we're starting to see it. All the Canadian labels and the maple leaves on the local products, and what we are seeing over the last few days, my friends, and I'm sure you've seen it as well. If it's not clearly labeled as Canadian, there are people doing a little bit more research and turning that specific product upside down on the shelves, just to let everyone know that this is not a Canadian, or this is a made in U.S. product. It is quite interesting.
Wow.
And of course, all the liquor stores are removing American liquor and things like that. And you can say what you will. I truly think this, and it'll take quite a bit of time. Let's just say we come to agreement on tariffs or everything like that. I still feel that the Canadians will continue to buy Canadian products for an extended amount of time after this is all said and done, just based on, hey, this is something that an individual can have just a little bit of input on,
Yeah.
right? Do their little bit.
Yeah, yeah, and it's probably going to become part of the culture, right? To support local more so going forward than ever, right? So, yeah, it's probably not a bad thing for Canadian businesses, right?
Yeah, yeah. If you're a Canadian business, we got you for the moment. Okay, so all this noise, and that's exactly what a lot of this is. It's a lot of noise, Dion. Bank of Canada came out with an announcement today.
Right, exactly. So we've dropped another 0.25%, guys. So now this is, I think, a seventh consecutive rate drop from the Bank of Canada. Just a reminder, during COVID, Bank of Canada rate was 0.25%. It then zoomed all the way up to 5%, and we're now dropped down to 2.75. So we've dropped 2.25% from the peak of the craziness. And basically, if you were trying to get qualified for a mortgage 18 months ago and you ran into a brick wall and said that you couldn't buy or couldn't refi, I can tell you, I'm talking with many of those clients today who are now refining or buying because the numbers are so much better than they were about 12 to 18 months ago. So if you're in that category, guys, if you were disillusioned by not being able to qualify for the numbers that you needed, just know that the playing field's changed dramatically, and we're going downwards. We've got another meeting, Gary, on the 16th of April, and again, depending on how things go, it's likely that we're going to have another rate drop at that time. Many people are kind of speculating whether this would be a 50-point drop. It turns out it was just a quarter. But yeah, I mean, if things remain as volatile as they are now going forward for the next couple of weeks, then I think we could expect another rate drop.
It's quite interesting, and that rate drop. What does it do to the borrower's confidence, in a sense? And when they see news like that, does all of a sudden, do you get more inquiries right away, or tell me about that experience?
Yeah, so look, in isolation, of course it's good. Of course, that gives the regular consumer confidence that they didn't have yesterday, okay? Especially knowing now we've got 7 in a row that have come down. Like, we're going in the right direction. So confidence in that regard, yes, good. On the flip side, if you're concerned because you're working in an industry that could be impacted in some way by these tariffs, aluminum, steel, construction, manufacturing, then the confidence is robbed, probably more so, right? Because no matter how low rates are, you're not going to borrow money or make any big purchase decisions if you think that your income is in jeopardy. So yeah, it's a fine balance. And that all said, to answer your question, are we getting more inquiry? Yes, Gary, for sure. Like this first quarter of this year, compared to the first quarter of last year, where interest rates were as high as they were, yeah, it's night and day in terms of the inquiry, the confidence, the transactions. We've got clients buying more so in this quarter than in probably the last 2 quarters combined. So I can see that in my business right now.
Yeah. Yeah, and we should also remind people too, if you are borrowing on a line of credit, this impacts those rate drops impact that line of credit, correct?
Oh yeah, so lines of credit and credit cards and all variable interest rates. If you have a fixed rate, then you're not impacted directly. But if you have a fixed rate and a HELOC, the HELOC rate is a variable, and that's going to be dropping by that 0.25%.
Yeah, yeah, good stuff. Okay, you share with me a really neat story about one of your clients looking at their budgets and their next move, and location always plays a tremendous factor into obviously lifestyle. That's obviously an important piece of it, but as we all know, it factors into your budget.
Yeah.
Share that story with our listeners.
Okay, so this is a client whose workplace was in Newmarket, actually, Gary. Sorry, Stouffville. Stouffville. It was in Stouffville, and he was considering buying a property either in Bradford North, or Uxbridge to the east. And we were looking at the pricing, and the pricing that was the properties that were closer to where he worked were about $50,000 higher. Okay, and he said, I probably want the cheaper property. And when we talk this through, and this is part of our job as mortgage consultants, is like, okay, we need to figure out what your budget is. And many people will come to us and say, I can afford this much on my mortgage, but a lot of people don't ask, well, why this much? Why have you given me this number? And when you ask that question, they'll say things like, oh, well, because my car payment and the gas I have to pay to drive to and from work, et cetera, et cetera. So what we did was we actually explored those other numbers, in particular around the gas that he'd be putting in his car to drive to work on a daily basis. And this is the short story. The property that was closer to work would be $50,000 more expensive. That $50,000 translated to about $250 more on a mortgage payment. And in his mind, he wasn't able to manage that. But when we were on a Zoom call, and I pulled up Google Maps and I mapped out the distance from the more expensive property that's closer to work versus the cheaper property that was further away from work, and we looked at the kilometers to cover and the gas mileage involved in each, we found that by living closer, he would save about $60 a week in gas. Okay. And so the math was such that in 1 month, he'd be saving about $300 in gas, which then allowed him to buy the $50,000 more expensive property, which would only cost him $250,000 more on the mortgage. Basically, the net result being $50 extra in his pocket and living closer to work. So it was like a massive win. He was so happy that we'd actually done the math and pulled the Google map up, which he said his bank didn't do that. And of course, well, it depends on who you meet at the bank, but this is the kind of stuff that we do regularly. And on top of all the money savings, Gary, he's a family man, and this would result in 3 hours less on the road per week. So, and how do you measure that? You don't measure that in dollars. You measure that in time and with your family. So that's a huge thing, being able to be home 30 minutes earlier to spend that time with your family. I mean, how do you measure that in dollars?
Yeah, that's amazing. I love little pieces like that, because we often get stuck in the dollar and cents, right? And we don't look about, or we don't investigate, if you will, or research or ask the different questions. What is that going to do to my lifestyle? And not only was this a lifestyle choice, or sorry, a budget choice. This was a huge lifestyle choice, because that time with family or time away from, driving every day was going to pay a tremendous amount of future. What's the word I'm looking for? Opportunity, if you will. That'll come back in tenfold for that individual. That's amazing. Here's what I want to know. When you're talking with clients like that, and you kind of look at things from perhaps a different perspective, and sometimes we all need a different perspective in our lives, or somebody like Dion, or somebody that just can ask those questions that we know we should be asking, but we don't that we're not asking. And it's kind of like that coach or mentor on your shoulder, if you will. Hey, just to ask those simple questions. What's the response that you get when you ask those types of questions?
Yeah, well, it's funny because I actually had a call this past week where a client says to me, "This conversation has changed my life," which
Oh,
is
wow.
quite a powerful statement, right? And this is a client who was banking with his same bank for the last 27 years, I think he said, and he was coming up for renewal. He had a son going into university, and he was also worried about being able to pay off his house and set up his retirement. So, and he's in his 50s. So, general questions that people have. And I spent about 40 minutes on a call with him. And I said, okay, well, here's how we're going to pay off your house. Here's how you set up your kids. And here's how you can buy an investment property. And again, things that he said that, he's been dealing with his bank 27 years and nobody had ever spoken to him in the ways that we were able to sort of display his future. So, yeah, man, it's exciting to be in this position where people just think, okay, we just get mortgages done, which we do. But along the way, there are some bigger questions that we love helping solve, right? So that's the fun part of the job.
Okay, I'm gonna go a little off script here, but this is where the gold is, my friends.
Yeah.
I, I like asking questions like this to people like you. When you have clients come for the first time, or maybe it's that repeat client, what's the one or two things you wish that they would ask you or that they would come prepared with?
Yeah, so well, everybody's always looking at what's their next step, and that's always important. Okay, you need to know what your next step is. But I always like to pull people into the future and say, okay, I know what you need to do and why you're doing it, and the decisions that you're making and why you're making those decisions. But let us see how this decision might impact you in 5 years and 10 years. Okay. And this is where, again, like with this guy with the house that would be much closer to where he worked, and let him be home with his family for that extra 30 minutes every evening. Like that's something that a lot of people just don't really think about. So that how do you measure that? That's one example. The other one is well, and again, the same particular buyer, Gary. We were looking at a property with a basement apartment, and he was coming in looking at buying maybe something for 700. And well, I ran the numbers. I said you could buy for 850. He's like, well, that's too much. Okay, but here's the thing: the 850, that extra 150 grand, it's going to cost him about 1,500 bucks a month in extra. Sorry, not that much. An extra $750 a month in mortgage payment, but the basement would rent for 1,500. Okay, and the 10-year projection on a 700K property versus an 850K property is tremendously different, and the extra 750 in cash flow for buying the more expensive property, but it's actually cheaper to hold. Like little things like that, which again we just see from experience, are things where we can just say, hey, look, have you considered this? Have you considered this? Maybe they'll go for it, maybe they won't, but at least they know the
Yeah,
choice.
I love it. And yeah, no, GI Joe. I don't know if you remember this. Knowing is half the battle. Right? And I'd say it's majority of the battle or your decision making when it comes to your finances and real estate.
I think, Gary, and I think you could say this as well. You're probably a better realtor today than you were 5 years ago, and I'm a better broker, mortgage broker today than I was 5 years ago, just because of the number of people we've helped along the way and the various scenarios and profiles and problems and solutions we've had to find along the way. So when we sit down with a client today, we bring that 20 plus years of experience to this one conversation, which, yeah, you're just here to talk about mortgages. Sure, we can talk about that, but let's also factor in these other things, which again, I think people, now that we're old, Gary, officially old, we can now say we have experience.
Yeah, yeah. We are definitely old. I met up with some old friends, I call them, and we realized it was 30 years since we known each other. That's a long time. Anyways, we digress. Here's the thing, my friends, is as we were just saying, education, knowledge, more importantly, plays a tremendous role and should be play a tremendous role in your finances and your decision making, creating your monthly budgets and looking at your next opportunity. And when you have people like Dion on your team, That is a huge asset because, as we all know, and we probably all experienced, Dion, going into your local bank or sometimes your local mortgage broker doesn't have that experience and knowledge that Dion and his team have. Remind us how to get a hold of you, my friend.
Yeah, kangamortgage.ca or Instagram at the Dion Beck.
There you have it. That's Dion Beck. Of course, I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.